So we've got three topics of conversation this week. The first one is an update on the markets. Then we're going to have a look at the implications of the autumn statement. And we're going to finish with a comment around emerging markets, the exposure and the performance of emerging markets within portfolios. So it was fairly uneventful in the markets last week, but of note is the new all-time highs that we've seen in the US equity markets. Both the S&P and the Dow Jones have hit new all-time highs despite Thanksgiving. Elsewhere in the markets, Asia has been broadly up a little. Europe and the UK has been very broadly flat. One notable exception is that gold has been very weak, down about 10 or 12%, and that's on the back of the higher inflation, higher interest rate outlook post the US election. So the autumn statement was fairly uneventful. I don't think it came across with any new surprises. Really, it just confirmed a lot of what had previously been spoken about in terms of personal allowances and the higher rate tax threshold increase to 50,000. Those will come in from 2020. There's going to be an increase in the ISA allowance from next tax year, that's April 17, for 20,000. And the government issued a statement saying it was going to have a commitment to greater spending, principally on infrastructure and technology. So when we look at the portfolios and what's performed particularly well, emerging markets stand out as one of the better performers, particularly in the equity space. In a typical sterling balance mandate, emerging markets would represent in the region of 7% of the portfolio. So we like this space and we've got a reasonable exposure to it. Additionally, we'd have a couple of percent to Pacific Basin. Now, we'd hold exposure through a mix of third-party funds. On average, these third-party funds are up in the region of 35% year to date. So that's a really good boost for the portfolios and for performance. The best markets in emerging world are, in order, Brazil, Russia, China, and then India. So after several years of emerging markets struggling to perform well, it's really encouraging to see them being strong contributors to performance this year. I think it speaks loudly to our views about sticking with what we feel we really want to invest in and that strongly diversified approach within equities, which will include, of course, emerging markets.